This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Serezna.
Now, listeners, you can find the download link for the Postgame chart deck in your Research Roundup email. If you don't have a Research Roundup email, that means you have not yet registered at MacroVoices.com. Just go to our homepage, MacroVoices.com, and click on the red button over Daniel's picture that says Looking for the Downloads. Now, let's get to these markets. Nick, the S&P 500 had a quick drop on this CPI number, which was obviously a very negative high inflation number. But we reversed it within hours and we're positive on the day. What's your take on the markets?
Yeah, that was a pretty crazy move, watching it fall to those key levels of 3,500, as I mentioned last week, which were the expected lows for the October 21st OPEX. So as I speak right now, the spot price is 36.45. And the expected move for the October 21st OPEX, which is next Friday's option expiration date, is 105 points in either direction. So that denotes a 2.88% move in either direction. The upside target there is 37.50. The downside target there is 35.40, which we breached this morning. Now, for the November 18th OPEX, which again encapsulates the midterm elections in the United States, we have an expected move of about 260 points in either direction, which denotes about a 7.1% move up or down. Upside there is 3,900. Downside there is 33.80, which is my bottom target. Put to call interest 1.63, and the IV right now of 29.1 denotes expected moves each day of about 1.8%. Now, Patrick, what are you thinking about the S&P right here?
Well, Nick, this reversal day was really interesting because a number of the technical techniques that I use were measuring moves down towards 3,400 or lower on this S&P, including on the NASDAQ down toward 10,000. But with this type of a news event and a reversal on the news, it really asked the question as to whether we see a tradable swing low. Now, I don't want in any way make it more significant than a short-term low, but whenever you see a drop and pop this way on news, it is always worth paying a little closer attention. For me, the S&P 500, the Fib zone I'm watching is just above 3,700, not much off from where the level you're looking into next week. And the way I kind of look at it is the bulls really need to clear 3,700 legitimately to actually reverse this short-term trend. If we see them still fading below 3,700, then the downside window is still open, and I'd be looking for a continuation on the downside. Anyway, Nick, you were talking about some observations on the VIX. What are you thinking here?
So this morning, looking at the VIX, when it popped on CPI numbers, we saw it push to near 34. I mentioned last week the highs usually end up being around 35, and we tapped that about 12 times this year. So we bounced off that level, and right now the spot is 32, denoting expected moves about 2% per day in broad markets. So right now, it's important to remain cautious. Again, this rapid reversal this morning tells us that perhaps we saw a short-term bottom, but it's also possible we see new lows prior to the November midterms in the United States as well. Now on page 4, we have the U.S. dollar index. What are your thoughts here, Eric?
Well, guys, remember a couple of weeks ago when I said, okay, blow off top is the most likely outcome, but we should also be prepared to at least think through the possibility of what it would mean if the dollar index were to continue to rise even higher. Because if that happened, the significance would be profound. Well, guess what? We're not at a new high yet, but after blowing off and retracing down to 110, We came right back up to 113 on Thursday morning. Then it came off a bit after the CPI print. Now, if this goes to new highs, and it's not looking like it right now, I'm just saying it's prudent to think this through so you know what it means when it happens, if it happens. If it goes to new highs above where it was, and particularly if it moves to above 120, let's say to 125, that means shit just got real. It means that we're going to see a major breakdown of the global economy. I am not predicting that outcome. It is an outlier. I'm just saying make sure that you're watching closely. If the dollar starts to run away to the upside from here, it means that we've got a really serious problem.
Yeah, Eric, your big picture view on the dollar, I get it. It makes a lot of sense. But one of the things that I was really looking for is whether or not the dollar index can actually continue and push on to higher highs. The interesting thing is that we're starting to see divergent price action in some of the currency markets. Shockingly, the U.S. dollar yen just continued to advance to new highs, while the Australian dollar and the Canadian dollars remain weak, making lower lows. But both the pound sterling and the euro did not make lower lows in this sequence and seem to have reversed here on the short term, and that's going to be pretty important. If the dollar index can't clear that 114, 115 high level, and we see any reversals back down below 111 next week, then we have to really ask the question whether some short to intermediate high in the dollar is in, especially if it reverses off of something like a big CPI print like this. Now, I'm not forecasting that yet, but I'm 100% watching breaks below 111 because that actually would be, in my mind, a genuine short-term risk-on signal. It could send precious metals, many commodities, and even in some part equities higher if that dollar reverses. So it's certainly going to be on my mind over the next couple of trading sessions.
So next on page 5, moving on to crude oil. Patrick, what are you thinking on this?
You know, the chart on crude oil actually is starting to be very interesting. Whenever you have such a sharp reversal like we had that got crude oil above $90, it really indicated that that dominant downtrend that that's been in place since June may be running out of downside momentum. One of the key things for me was whether or not the market was going to be able to hold above $85 on crude during this pullback. If we start seeing that dips are being bought and price action starts to hold above $90 on a sustained basis, it would be the first bullish price action we've seen in crude since the first and second quarter rallies. And so while I'm reluctant to be uber bullish yet, this price action into next week is probably some of the more important, or at least one of the most important markets to watch.
Now, Eric, what are you thinking on gold here?
Well, our good friend Ola Hansen at Saxo Bank has a note out this week saying that they're still bullish gold, but holy cow, on the day that missiles are flying and 20 cities in Ukraine are simultaneously being decimated in a major military action, the supposed geopolitical risk hedge of choice, that's gold, was down $20 on the day. Gold just plain isn't acting like most people predicted that it would under these conditions. Now, I'm still holding my longs because I think the war situation is worse than most people understand. I do think gold eventually is going to have its day in the sun. But if the Dixie breaks 120 to the upside, look out below. The gold has really just been operating as a currency pair. And as dollar goes up, gold goes down. If dollar breaks 120 to the upside, which I do not think is likely, but if that outlier should occur, watch out below for gold.
Eric, I totally get your view on gold, but to me, gold has been and continues to simply trade as a cross currency to the US dollar. And whether or not gold's bottom is in on the short term is all about that dollar chart we were just talking about. When you look at the price of gold when it's priced in euros, or you look at the price of gold when it's priced in yen, gold continues to actually do relatively well. And as a cross currency, it's been relatively defensive relative, but obviously the most dominant asset has been the US dollar. And so in my mind, if we've seen some sort of a short-term high in the dollar, we could see gold hold the line here. And if we see it break above 1750 in the coming weeks, that may mean that this downtrend that's been in place since March may finally get some relief, and we might see price action get back to the 1800s. A little bit early to be bullish, but I think it's all about the dollar from here.
Folks, if you enjoy Patrick's chart decks, you can get them every single day of the week with a free trial of Big Picture Trading. The details are on the last pages of the slide deck, or just go to bigpicturetrading.com to start your free trial.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit macrovoices.com.